Private equity in accounting. What does it mean for you? Are you going to lose your job? How is it going to affect you? So, in this video, I'm going to dive right into that topic. If you're new to the channel, my name is Callum. I'm a chartered accountant here in the UK, and I talk about all things accounting and how to help accountants excel. So, at the moment, PE money seems to be flooding into accounting firms. You've got PE firms buying up these small and mid tier firms and merging them into these larger networks. Now, effectively, this allows for both consolidation. So, look at economies of scale. Firms are able to increase their service offerings by buying up new firms who perhaps may have niche services or niche sectors that they essentially service. And there's also the access to talent that comes from that. So, there's obviously a bit of a shortage of accountants at the moment. So, buying up a firm could be an easy way for a large firm to effectively gain talent very quickly. And there's also the efficiency improvements. So, new technology, cost cutting, standardized services, effectively all being allowed by PE. So, why does PE love accounting? Now, accounting is probably the most solid business model you are going to get. And remember, what's stable and predictable is what makes money. And what makes money is what PE firms absolutely love because their sole goal is to make money for their shareholders. So, if you look at accounting, it's a very solid business model in terms of one, the client relationships, two, it's recession proof. Even during a recession, you're still going to need to file your accounts, you're still going to need to produce a tax return, and it's very predictable recurring revenue. Plenty of clients stick around for an awful long time with accounting firms and they build strong relationships with their accountants. So there's little need for people to jump around between firms, and generally, people don't really shop when it comes to accounting services. There's also the efficiency improvements. So, new technology basically coming into accounting and freeing up time for us accountants to focus more on advisory work, which we charge for higher fees for. And there's also offshoring and AI, which is allowing for outsourcing of this compliance work and effectively reducing the demand for people to basically come in and do this work. So, offshoring, using countries abroad and firms based abroad, outsourcing the data entry, compliance, basic audit testing to these people because it's far cheaper for a firm to do that than it is to bring someone in house. And then there's also AI. So there's plenty of AI tools popping up left, right, and center. You've got the big players like Xero and QuickBooks offering AI solutions in terms of reconciliations and invoicing. And this is, again, freeing up time for accountants. So there's plenty of potential for PE to come in, start utilizing these tools, cut costs, and really increase efficiency. And then we look at fragmented markets. So PE firms like to see opportunities to consolidate these small firms into large networks, which is kind of what I touched on a minute ago. But by doing this, they gain economies of scale because by bringing all these firms into a large network, they can span off their client base and increase their service offerings. And then we look at the fragmented markets. So PE firms see opportunities to consolidate these small firms into larger networks. And this is happening very often. I see plenty of articles pop up and emails from various sources that I follow saying these firms are being bought up pretty much every other day. It's pretty insane how fast it's happening currently. So it really just shows the scale of change in the accounting market and really where the future is going. So now that we've covered what's going on, how is it actually going to affect you? So if we start by looking at the good, PE can allow for higher salaries. So there's the possibility for equity or profit sharing to incentivize employees and also to compete with other industries. So if you're a fresh graduate like I was 3, 4 years ago, you're coming out with a degree and you're thinking, right, what is it I actually want to do? There's tech, there's finance, there's accounting, there's entrepreneurship. Accounting firms aren't just competing with each other. It's not just big four versus small firms. There's also accounting versus finance, accounting versus tech. And these PE firms pumping money into accounting is hopefully going to allow for higher salaries and higher starting salaries, which I really believe accounting very much needs, given the amount of work you have to do if you are a trainee in a larger firm compared to the compensation for that. And then we look at career advancement. So PE is effectively going to create new roles. So if you look at a current accounting firm, you have the partner and then a manager, and then it kind of works down like that. Whereas PE is kind of revolutionizing how things are done and making it more startup esque, you could say. So you have roles like head of data, head of AI, head of analysis, all these things that you hadn't really thought of in an accounting firm before are probably going to become more relevant, more frequent. And then, as we touched on, there's the exciting technology. So, PE firms, obviously having a lot of money, are going to be able to invest heavily in tech to increase efficiency, which you, as an accountant, if you are at a accounting firm, are going to be able to benefit from. It might take away some of your tedious tasks that you don't want to be doing, and in general, just free up some of your time. But where are the bad? So, there's no doubt that there's going to be job losses, which is one of the unfortunate side effects of PE. So, PE money coming in, they effectively want to cut costs, right? That is what they do. They cut costs, they want to improve efficiency, and ultimately increase revenue and profits. And one of the easiest ways to do that in a lot of firms where staff costs are generally high is to unfortunately cut employees. Now, whether that will be accountants in general, whether that will be bookkeepers or accounts payable, accounts receivable, it's quite hard to tell and it really depends on the firm. But no doubt, if PE money does come into a firm, one of the first things they'll be looking at is where they can cut costs. Then there's the increased pressure on employees. So PE firms wanting to make more money are going to want employees to increase their chargeable time. So if you have to do timesheets, maybe they'll set a standard amount of chargeable time you have to do each day or each week. And you're going to have to stick to that. And they will probably be quite hot on how much chargeable time you actually deliver because it's all about efficiency when it comes to PE. And then there's that loss of firm culture. So P firms are going to come in, buy up a firm, and effectively systemize everything as much as possible to increase efficiency. And there's a danger that accountants might just feel like a number there to effectively increase shareholder value. And they aren't really individuals, they are just part of a big system, a cog in a big corporate machine. And that is obviously one of the big dangers of accounting and PE coming into accounting firms. So, will it ruin accounting? Now, obviously, that's quite a big question. What does that even mean? I don't know. But when you look at it like this, PE firms care about profit and maximizing shareholder returns. So, this could mean cutting costs. I've heard some stories on Reddit and through speaking to people of how this is happening in their firms that are being merged into these larger firms or taken over by PE. And some people are obviously quite upset about it because it is affecting them quite heavily. And there's also the conflict of interest. So that drive for profit that PE firms really strive for could seriously negate on quality when it comes to the work being provided. But as I mentioned, it will probably allow for higher pay, which really accounting needs if it wants to start competing and if it wants to fix the talent shortage and talent pipeline. And not to mention the career growth opportunities and access to technology that PE is obviously going to bring. So, with all that being said, what do you think of PE in accounting? Do you think it's a good thing or do you think it's a bad thing? Drop a comment letting me know below and I'll get back to you. And on that note, I hope you enjoyed this video and I'll see you in the next one.